Hi everyone. Today I'm going to share a wonderful product offered by American National. The product is Signature Guaranteed Universal Life. It's a GUL. Okay, this product has pretty much all the feature that we like, and at the very affordable price. Okay, so product highlight. So this guarantee a death benefit up to age 121. Now, of course, you can also choose the death benefit guarantee benefit like up to like between anywhere age 95 to 121. Okay. Now, and death benefit is tax free. Okay, the beneficiary get the they get the benefit without pay any tax. Okay. Now, and also it has a guaranteed cash out rider. So whatever the premium that you pay into the policy on the 15, 20 or 25 policy anniversary, you can get up to 100% of the all the premium that you pay into the policy. Okay, partial or full return. Now on the 15 you get partial, on the 20 and 25 you get full return of the premium that you pay into the policy. So this gives you flexibility to get the cash back without any need of the policy, right? So, and also it offers three accelerated benefit riders. So accelerated benefit riders is also similar. It's the same as living benefit. Life insurance policy has changed a lot in the past years, and life insurance is not only right now. Life insurance it used to be only after the insurer die, then you start to function, right? Start to pay out the benefit. But now, insurance policy has changed a lot, so they're adding a living benefit. Means the insurer, even before the death and without die, the insurer can access the benefit from the life insurance policy, especially when they're in illness, when it's in sick or illness or long-term care need, um, critical illness, terminal illness, chronic illness. They can start to get get out from the benefit early, without being dead. Okay, so they can use it when they're still alive. Okay, now, so how does it help you? So it can help in many areas. For example, they can the UL can use it to help protect your home, protect your mortgage, pay out your mortgage, and protect your home so that your family, the insurance care family, can stay in the home without losing the home, right? They can also the benefit can also give up to the beneficiary so that they can have an income to live for the retirement years, right? And assure continuation of the family business, complete your child and grandchildren's education, right? And pay the tax and final expense. Now tax including especially including the estate tax. So estate tax it has to pay the estate tax before the estate amount give it to the beneficiary. So there's some tax involved, okay, and up to 40% of the tax. Now, in the event of a qualifying illness, like terminal illness, critical illness, or chronic illness, or long-term care illness, so the insurer can access or can take out access the face amount, the benefit. This is through the accelerated benefit rider, okay. And of course, there is tax advantage of wealth transfer. The benefits transferred to the beneficiary is tax free. Now, this is just a simple product summary. So, age 18 to 80, issue age, and male, female, minimum 25,000, and then you can pay the premium annual all the way to monthly, bi-weekly, okay, and policy face amount benefit cannot increase, but they can decrease, but the minimum death benefit is no less than 25,000. I also have benefit rider, guaranteed cash out rider, which is one of the important rider that we will discuss later next, and also a salary benefit we will also discuss next. These are the very important riders. Surrender value, surrender period 10 years. First 10 years you may, if you surrender the policy in the first 10 years, there will be some surrender charge may apply. Okay, now this is the guaranteed cash out rider. Guaranteed cash out rider, what does it mean? Means, okay, if you have that benefit 25,000, no, 250,000, sorry, plus, okay. Now on your 20 year, you can get 100% of a premium back, leave up to the 65% of that benefit. Okay, so let's say your death benefit is 1 million. Okay, and the 65% of the death benefit is 650,000. Now, assuming the total premium that you pay into the policy in the past 20 years is 400,000, or maybe 200,000. Okay, 200,000. Now, 200,000 premium, 100% to 200,000. Now 65% or 65% of the death benefit 1 million is 650,000. So 200,000 is less than 650,000. So you can get 100% out. 100% of the premium out. Same calculation to the 25 years. And 15 years is a little different. They only give us 65% of the premium that you pay in to the policy in the past 15 years. Okay, so this is a guarantee cash out rider. Okay, now we want to discuss this first. Now this one, we talk about guarantee cash out rider. Now we talk about accelerate benefit rider. Accelerate benefit rider, there's three main rider. ABL for terminal illness, okay, for use if eligible insurer diagnosed with illness or chronic condition that is expected to result in death within 12 to 24 months. That's called terminal illness, and then you can exercise the ABL rider to start getting the money from the death benefit. Now remember, still living. Okay, the insurer is still living, and they can start to access the death benefit, right, because of the terminal illness. Now, same thing, critical illness. If the insurer is unable to perform 2 out of the 6 activities of daily living, bathing, conditions, dressing, eating, toileting, or transferring, or has a severe cognitive impairment, so all these things consider a chronic illness, and then they can use this reason to access the death benefit amount. Now they're still living, the insurer is still living, okay? They don't have to be die, okay? Now, ABR for critical illness, for usage if the insurer experience a critical illness such as heart disease, stroke, stroke, heart disease, cancer, those are considered critical illness. So they can also use this reason to access the death benefit. Okay. Now, minimum policy death benefit to obtain rider. If you want to get the terminal rider illness, 250,000. If you want to get chronic and critical illness, 50,000 minimum death benefit. Okay. Now, maximum. What is the maximum you can accelerate? So, for example, if you have a policy, if you are aged between 0 to 65, and your policy is 3 million, now the maximum amount that you can access or accelerate from the death benefit which is 3 million in this case, is up to 2 million. Okay, so if you are 66 or older and then you're saying you have the same 3 million policy, the maximum amount that you can accelerate is 1 million. Okay, so this is important. They do have some limit, like 2 million, 1 million, depending on age. So keep that in mind. Okay, now application. I'm going to talk about some application here. So signature GUL, cash out amount. So this is a perfect product to offset mortgage risk. So what do I mean by mortgage risk? So for example, if the borrower is not able to pay the mortgage because of that or because of illness, now the borrower family may risk losing the home because the mortgage is not paid, right? So the borrower can buy a GUL policy, okay, and this GUL policy has to be same or more than the mortgage balance, so that the whole mortgage balance is covered by a life insurance. Now remember, the life insurance can be accessed, can pay out the benefit when the insurance die, or is dead, or they have some illness or illness, right? Terminal, critical, or chronic illness. They can accelerate the benefit out and to pay off the mortgage, right? So then they will not lose the home. The whole family will not lose the home. Now this is a chart showing the remaining mortgage balance from the beginning. You can see it keep going down, right? Now at the same time, the borrower buy a GUL policy, and if you look at this one, at the 15th policy anniversary, the premium that he pay and the 65% of that is about 25,000. Okay, so he doesn't need to take it out, but he can take it out, but he doesn't need to take it out. Okay, he can stay there so that he can keep the borrower or the insurer keep the policy to continue to protect the mortgage, right? Protect all this balance, right? Now on the 20 years, he has the borrower has a second chance to cash out the amount, which is a great one. Now at this year, it happened that the cash out amount is same as the mortgage amount. So what he can do is he can cash it out and pay off the mortgage, and there's no mortgage. There's no need for mortgage protection anymore because they pay off, right? Now you say, okay, no, I don't want to. I want to keep the mortgage, and I want to keep the policy, and then you can wait until 25 year. Now you get more premium pay in, and then you get the cash out that you can get at that time is 65,000, right? 65,000, more than 65,000. Now at this time, if you can use the amount, partial to pay off the mortgage, normal mortgage, and then the rest you can take it out back, right? So or you don't do anything and then continue to hold the policy for life, right? Continue to hold the policy for life. Even you pay off the pocket, you pay off the mortgage, right? So this is a guaranteed UL. This is for permanent life insurance, okay? So, but you do have 3 times that you can cash out and stop the policy. You don't need the policy. You can have 3 chances to cash it out and then discontinue the policy. But this is a perfect policy to protect the mortgage risk. Okay, now this is one application. Second application that I want to talk about is the estate tax. Okay, in this case, Joe. Okay, Joe, if he doesn't have an ILIT is a irrevocable life insurance trust. Okay, if he does not have, okay, now if he does not have a ILIT, his estate's estimate value at that time is 70 million, and then minus real estate loan 2 million, and then he has some life insurance policy 2 million, and total taxable estate is 70 million. Okay, 17 minus 2 plus 2, 17. And federal estate tax is 2.24 million. Now 2.24 million, that is, so what, how does it calculate this number? It's 70 million minus the exemption, which is 11.8 million, and then the subtract, right, minus 11.8 million, and then the remaining tax as a 40%, and like average 40% estate tax rate. Now that now is 2.24 million tax. So after pay this tax, then the remaining estate is 14,760,000 will pass down to the beneficiary, or the family. Now if he set up an ILIT, if he set a trust, same 70 million estate, and then same loan minus. Now in this at this time, there's no life insurance because he moved the GUL to an ILIT. He moved the GUL to an ILIT. So he no longer have GUL or life insurance policy under his name. He moved to ILIT. Then the taxable asset is 15 million, and as they estimate federal estate tax is 1.44 million. See, the tax is less, much less, right? And then remember, he has a GUL. He moved to the ILIT, and then the ILIT, because of the debt, right, of the debt event happened, then the ILIT will execute this policy, and this policy will pay out 2 million, right? Now pay out 2 million, then that's why you see the 2 million come back here, right? Now your estate tax is only 1.44 million, but you have the insurance company pay 2 million, so this 2 million is enough to cover the entire estate tax. So the beneficiary or the family member can get back a lot more of the estate, right? So this is important to set up a GUL, because it's guaranteed life insurance. So it will never lapse as long as you pay the premium, right? So it doesn't matter what market situation or what expense is guaranteed for life. Okay, now this is one big topic, okay, that how to lower the estate tax. Now estate tax average estate tax rate is 40%, and then there's our president is talking about lowering the exemption from 11.8 million to half of that. So that means you have more taxable estate to be taxed as 40% tax rate if that happen, right? So now another application is college education fund, right? So to guarantee GUL, if the insurer die, the benefit will be paid out to the beneficiary, tax free. Okay, and then the family member can use it to pay the college education, to college education, to pay the children to college education, right? So or give them the income, the replacement income for the family, okay. So this is very important policy. So you can do many things, and then everyone should have one to protect themselves and their family. Okay, if you need more information on that, or if you need a code, how much premium for how much coverage, email us, and our email address is at the bottom of the video, or at the bottom of this video. Um, and you can email us. While our licensed insurance agent will contact you back. And please also subscribe to our YouTube channel. And we because we often update the latest life insurance product, and also the annuity product, and some rate sheet and rate sheet, and also some of the strategy, for example, okay, estate tax, college education fund, living benefit, also like something like mortgage protection, or how we increase our return, uh, our investment return, without without the market risk. So we'll talk about those detail, and subscribe to us if you're interested. Thank you for watching, and bye.